record this and load it to our NEDCO website so that we can utilize this as part of our NEDCO learning library. So just a quick introduction. I am Larissa Philpott. I'm the president and CEO of the Nacogdoches Economic Development Corporation. And this is part of a series that we've been doing the last couple of months to help businesses respond to COVID. A few weeks ago, we were meeting with the Main Street Committee, and several of the Main Street businesses suggested that one of the things that they could use most to help them survive is just some tips on financial strategies. They had questions about their P3 loans and what do I do if I just can't pay my mortgage and things like that. And so Jimmy and Scott with Commercial Bank have volunteered to help us here, and we're so thankful to have Commercial Bank as such a big sponsor of NEDCO and big members of the community. Just a quick little rundown real fast of a business survey that NEDCO did a few weeks ago, and that survey link is live on the chat box. If you would like to take the survey, we'd really appreciate it. It is helping us learn what you in the business world need. And those of you that might be watching this later online, you can email me if you can't get to that link. My email address is lphilpott@nedco.org. The survey responses that we've gotten back so far, of those, 72% of the businesses said that they've lost revenue in the last 3 or 4 months. A third of our businesses that responded said that revenue has decreased by more than 50%. So we know that you guys out there are all hurting, and you are not alone. And that's part of what we wanted the message that we wanted to give to you. And I'm so thankful for Jimmy Mize and Scott Boyer. They have taught me a lot about banking, and especially banking in 2020. It is a very different landscape than it used to be. So don't be afraid. There's friendly people out there like Jimmy and Scott that want to help you get through this. So with that, I am going to turn the microphone. I'm going to turn myself off and hand it over to Scott.
All right, thanks, Larissa. Hopefully everyone can hear okay. Information is interesting. I think it's not surprising. I know to me and to Jimmy and to others, I think that's consistent with what we're hearing. We have a lot of businesses in town and in the country that are doing extremely well, and then have some that are hurting really bad. I'm guessing that the ones that are probably not the ones that are doing extremely well, or that are having record sales. So we'll try to address what we can here today. We don't have magic pixie dust that's going to solve all the problems in the world. I don't think anybody does at this point, no matter what we're talking about. But we'll try to walk you through a few things, hopefully a little advice or whatever, and then really open it up. I think the question and answer part of this and just interactive part is going to be probably the best part that I could think of that we could do, and try to answer as many questions as we can. And sometimes the answer is going to be, that there's not a great answer. Again, my name is Scott Boyer. I'm the Chief Lending Officer here at CBTx downtown, and been here for a long time, been doing this for a long time. And so we'll lend our experience certainly to you today. And we'll talk about some PPP things and lots of different things. But that's an introduction of me. I'll let Jimmy kind of introduce himself and a little background, and then we'll kick off with some meat and potatoes.
Oh, thank you. And I'm also work at Commercial Bank with Scott. I'm the market president for the Nacogdoches banks. I've kind of, while Scott chose Commercial Bank and stayed there through his career, I've kind of done a little walkabout. I was at Commercial first for about 10 years, then went across the street to Stone Fort that became Regions, and left there, went over to First Bank and Trust for about 10 years, and then finally made my way back to Commercial Bank, and I'm certainly glad to be back at the bank and be a part of it. It's really been interesting times that we've been through, especially as the PPP program or the Triple P program, whatever you affectionately call it, came out, and COVID and the way that it kind of all coincided and caused us to work in different ways from home, and that kind of thing. So what it's allowed Scott and I to kind of do is a little bit of tag team, kind of me to be in the branch and kind of be the face and maybe work directly with the customers, and then Scott's kind of work from home and kind of work behind the scenes. And I brag on him because he's extremely good, but Scott knows these PPP loans in and out. He got us on board and got us in a place that we could make the advances and get into the SBA portal and find a way to take care of our customers. But now, as we begin the backside of this thing, the forgiveness piece of it, Scott is ready to go on that and is extremely knowledgeable of that. So I think that's the first thing that we're going to go into is kind of talk to you some about forgiveness of these loans. It's complicated. It's government. It's like filling. So anyway, we're going to start with that, and then I think we're going to come around and talk about more practical solutions to difficulties later in the meeting.
All right. So talking about PPP or triple P or P3, like Jimmy said, whatever you affectionately want to refer to it. There's lots of other words over the last few months that I've wanted to. We're at that point now. The program is just closed down for now as far as new loans, and so we're at that forgiveness piece. And I guess the first thing I want to say is I think a lot of you probably know and understand that there's ongoing legislation. Hopefully, it will be as such that we can. I don't know. I'm getting a little feedback, Doris. I don't know if that's anybody. Maybe that sounds better. Okay. A lot of legislation going on right now and a lot of talk. The biggest thing that probably hits most people on this call, and certainly hits 90% of the loans we did, would be if they passed the $150,000 loan and under, that would get essentially automatic forgiveness by turning in a little one-page attestation. Around the country, that's depending on the bank, somewhere between 85 to 90% of those loans, and that's a total game changer because you don't have to spend the time that it takes to put this information, this data together to get the forgiveness. It allows you business owners to do what you do best, and because I know so many of you are the head salesperson, the CFO, chief bottle washer, HR, you're everything. And you don't need to be government employee on top of that. And that's, so we're very hopeful that that's going to be the case. So it'll work very well for the customers if that happens. Works very well for the bankers because then we can devote that time that's needed to those larger loans that are more complex and maybe need some assistance there too. And so it's a win-win across the board, I believe, if that happens. We feel good about it happening. The problem now is where it originally was going to kind of be a standalone bill, just push through and be done, has now been lumped on unemployment benefits, additional funding, different programs, and so it's going to eventually. I think it's going to be in there. We just don't know. The timeline is unknown. So that kind of brings us to where we are now, to where we have there's a lot of businesses that are, hey, I want to get this paperwork in, I want to get this thing forgiven and get it out of the way and move on, and then. Some of those are like, well, I'm just going to sit back. I'm going to sit quiet until somebody tells me I've got to do something. And all of those responses are okay, quite frankly, right now. There's not a ticking time bomb. It's not like on the front end of these things when the money was going to run out. And so there was a very much a sense of urgency. We're not there with this. You have time. As far as the documentation goes, hopefully most people will be able to do, aside from the legislation, so assume for a minute that didn't happen, that you could do the EZ form, the form 3508 EZ application that came out. It's still longer than any of us want, and it requires certainly some documentation, primarily things like just payroll reports or verification of what you spent on the payroll. That part's not, I mean, it's pretty much what we expected going in, what you were going to have to show, document how you paid those folks. But I guess to back up a minute, just in case you're not aware, the EZ form, you basically, if you didn't reduce payroll or reduce headcount, reduce payroll and reduce hours by more than 25%, and if you maintain your headcount, then you're eligible to do the EZ form. Same thing for sole proprietors and independent contractors. That's the form that they use. And that's a good thing because it's quite a bit less cumbersome. And you can, as far as the payroll costs go, it's pretty simple as far as what you got to show, what documentation you have to provide. And then I think it's fairly straightforward on if you're doing non-payroll costs, utilities, rent, interest expense, those kind of things. And I told Larissa, we've got a pretty good document that summarizes that. I think puts it in a pretty good layman's terms instead of the 6 pages of instructions. And we can certainly email those out to anybody that wants to. We can make that available. So I'll make sure Larissa has that when we get done here today. And so you can kind of go through her to get anything that we talked about today. Jimmy and I will try to provide you with as much information as we can. But the primary thing there is, first of all, deciding which application for forgiveness that you need. And hopefully most of you can do the EZ application. It's much shorter. Typical government fashion, it's a 3-page application with 4 pages of instructions. What else would we expect during this program with that? But one thing I would say, and this is going to probably be a theme throughout this whole conversation, is communicate to your banker. Whether it's me or Jimmy or Ron, anyone, this town is full of great bankers. And hopefully, if you got one of these loans, you got it from one of the great bankers here in Nacogdoches. Talk to them. They know this. We all have different levels of knowledge of the program, depending on kind of how deep into it you were. Luckily for most people, they didn't have to dive in as deep as I did. But I say, even if we did not originate your loan and you have some questions, I'll answer them. The rules are basically the same, regardless of where you got your loan. And so I'm available for anybody who has a question that I can answer. As it's been since the get-go on here, there's still some unanswered questions. There's very gray areas in this. And they tried to make a program that was a one-size-fits-all, and there's thousands of different scenarios that you all have, and that were not clear, and some of that will shake out. We have submitted some applications through the new portal that just opened up on Monday. We've submitted a few just to see how it's going to work, quite frankly. I'm confident in the system a little bit because the data is there. I mean, we can look in there and see all of the loans we originated. And so we've been able to upload those forgiveness applications, and we'll see as it steps. It goes through different stages, and I'm a Sonic junkie for my Dr. Pepper. And if you've gone to Sonic and you pull up in the stall and you see where it shows orders received, it's in the kitchen, it's up, it kind of goes through those steps. That's kind of the way this portal's set up. So I don't know if a Sonic junkie devised this program or not, but so we're waiting to see those applications move through that process, so we'll be better equipped to continue to help people. But the advice, maybe the last thing I would say on that before we move forward is, if you have done the application and you show that it's fully forgiven based on, and you've already done the work and you see that it's done, my advice would be go ahead and turn it in. You've done the work, it's going to be forgiven, go ahead. But if you've not done it yet, I may just hold tight for a little while. Or if you've done it and it shows that you're not going to be completely forgiven, in that scenario, I would certainly hold tight and keep calling your legislators. Jimmy and I didn't think of this until just this moment, but we do have a resource through the Texas Bankers Association that they've got a great link that you can directly contact your legislator, and ours are on board. So I'll say that in this area, we're fortunate to have people that are on board to support small business and our bankers. But it does give you talking points. Basically, it tells you exactly what to say and who to say it to. It's a great link to put some pressure and just reiterate, the need for this forgiveness. And so I'll send that to Larissa too, that we can get that out, because they've heard from thousands of bankers. Never hurts for them to hear from business owners. I think that's a different voice. They probably now, if they see a banker pop out, they're like, yeah, we heard you. We agree. Hearing from you, I think would be effective too. And so if you fill it out and it doesn't show that it's completely forgiven, I would hold tight. If your loan is less than $150,000. If it's greater than that, well, we're probably got to go through the legwork anyway and work through that. But the theme of the day: communicate with your banker, talk to them, work through that. So I could talk all day, but I won't about it. So I'm certainly available for questions either here or later. And with that, I'll stop talking and let Jimmy get.
Scott, I think a couple of other things that you might want to elaborate on. I'll give you kind of the idea, and you certainly feel free to run with it. But initially, the way you qualify for this program was based on 2.5 months of your payroll expense. And so 2.5 months is around 10 weeks, maybe 10 and a little bit more of a week. For forgiveness, you have to expend these funds in 8 weeks. So you see the issue. That's the way the program was set up originally. And so for some people, like a self-employed person who didn't have a lot of other expenses on their Schedule C that qualified to be used towards forgiveness, they could only get forgiven about 80%. So through pressure, like Scott was talking about before, from TBA, our group and others, the Congress went back and did new legislation to allow you up to 24 weeks to expend the 10 1/3 weeks of payroll. And so in the situation now, if you choose that longer period for forgiveness, it's almost impossible not to be able to achieve total forgiveness, as long as, the big thing, you've got to maintain your FTEs, your head count, and you've got to maintain your payroll at a constant amount. So again, like Scott was saying earlier, if you work on this and work up your application and see you're not going to be completely forgiven, you may want to wait and then look at a 24-week possibility, or even wait for the other form that we're hoping will come out at a later time. I'm gonna hit you on that one, Scott. And then the second piece is, I'm getting a lot of questions about, is there going to be a second round of funding for my business? And so it's kind of in the same legislation that Scott was talking about before. We just don't know the answer to that yet.
Yeah, thanks, Jimmy. I don't know that I can say it much better than you did on the 8 versus 24 week period. That was pretty clear, and they did expand that in hopes to get almost every one of these things forgiven. Again, with emphasis on maintaining your head count and not reducing people's salaries down below more than 25%. A big charge of that was led by the Restaurant Association nationally. That was a huge factor in getting that spread out, since a lot of you were made to shut down or to reduce your staff. And so only fair that they allow you some grace there. So I think that's very important. And like Jimmy said, got an opportunity to spread that out. Everyone can utilize that money during that period of time. The trick is just maintaining that head count and documentation. That's a big piece of it. While through the forgiveness portal, we only have to upload the application, not all the supporting data. They can come back immediately and ask for that supporting data. So we got to have it all. And we'll see. The jury's out on what they're going to come back and ask for. It may be very simple, or they may come back on every one of them and ask for more documentation. Certainly, the ones over 2 million are going to have, I mean, they've been warned that there will be an audit on those. But again, that's a small percentage of the overall loans. And so I think that's a big piece of it. You got me on that, Jimmy. What was the other one?
Hey, so round two, and some of the issues with us doing a round two.
Yeah, there's a lot of debate. You can find any answer you want if you Google long enough, and on what's going to happen. And things I see is that there's potentially a second round of this to go. I don't know if it's technically the second round because it seems like we've already had one too, but another where people could get a second dose of PPP funding. You see things that they would have to show that they've had, anywhere between 35 and 50%, depending on where you read, loss of revenue. Based on the survey that Larissa gave us some results for earlier, there's a lot of people that would meet that threshold. The devil's in the details. How would you prove it? I don't know exactly how they would come up with something that's going to work universally to show that you were harmed, about 50% or whatever the number was going to be. So that's going to be a big challenge, I think, for legislators to come up with, because I don't know exactly how you would do that. But that would be welcome on one hand, because I think it's there's so many businesses that need it. The challenge in some ways comes to the banks at that point, and the availability of those funds. If these loans are forgiven and they're paid off on our books, then we'll go nonstop again. The difficulty becomes for banks in general. If those loans are still on your books and another round comes, there's going to be banks that aren't able to participate just from having enough capital to do so. And so it's very important. And again, this is where I think it comes with us putting pressure on our legislators that we need to end this first one and get these things done and off the books in order to meet the needs of the community on the other side. So I think that's that's something that you have no reason to know that and have an understanding of that. That's what we get paid to do. But that's a real challenge that's going to be out there. And so I think we need to continue to apply pressure on our congressmen to get this forgiveness done, so that all banks can meet the needs of the communities that they serve. So I think from a PPP standpoint, that's all I've got. I mean, certainly available to answer questions now and later. If we want to move, I'll let Jimmy kind of take over from here.
Certainly any questions that anybody has now, you're welcome to do that. I'm just going to talk a little bit about other avenues for support that we think are out there. But if anybody has a question now for Scott, certainly, Larissa, will you know if they do?
I will know. I don't see any right now. If I do get one, I will let you know.
Okay, sounds great. Well, I think I'll move on. And one of the first things that I want to talk about is our world as a banker has changed. In the past, our regulators have been very strict about how we can help a customer, and maybe how we can't help a customer who's having financial difficulties. Obviously the bank is not going to try to extend terms or extend additional money if they feel like in the end that the business is doomed, or it's going to result in a more loss or a larger loss for the bank. But there's often circumstances and situations where if we could offer the customer a little bit of a pause in some way, that we can help them through the tough time back to the good times. And I think the COVID situation is a great example of that. And consequently, as this thing hit, our regulators responded. For a bank, it's always been taboo to what we call capitalized interest. In other words, let you skip some payments, ball those together, and then refinance them into your balance. That would just be, if an examiner found that in a bank, they're going to strictly criticize that loan and be critical of us as bankers. Well, they came out early on and basically told us that, you know, if you can make it make sense, then it goes. And I think all of that goes back to what Scott, you know, mentioned earlier, in that you've got to go down and you've got to go and sit down in front of your banker and talk to them and explain your situation, and then let that banker try to use their arsenal of items, of weapons, to help you figure out how to make it through the situation that you've got. And again, that needs to be supplemented with good financial information based both on you personally and on your business. But you've got to, if you're struggling and having problems, don't hide that from your banker. Go and share that with your banker. And I say that especially in these times, because not only, you know, do we want to help you survive, because we care about Nacogdoches as much as we care about commercial bank, but not only because of that, but also because the burden has been lessened a little bit on us, and we're actually encouraged, you know, to do those kind of things. So, you know, just that kind of being an overview. You know, just you got to go and talk to them and try to work through things. There's a couple of programs that I wanted to tell you about. One of them, and you may be aware of, one is the SBA EIDL loan. So Scott was talking about the PPP loan earlier. The PPP is done through a bank. A bank funds that, SBA guarantees it, and hopefully SBA pays it off. But the EIDL is a loan directly from SBA. I've not been fully engaged in an application, but I've had several customers who have gone through the process and been successful in getting the EIDL loan. EIDL is a disaster loan. They offer these during hurricanes or other natural disasters, but they're also doing it during these the COVID pandemic. So basically, it's a loan, and you qualify for an amount based on criteria that you put in. You go to SBA site, pull up the EIDL, fill it out, and it'll tell you what you qualify for. But you basically borrow that money, and it's repayable over up to 30 years, and I believe the interest rate is 3.75%. What it does, if you qualify, and again, you've got to use it for certain things. It's got to be used. I don't think you can go and buy yourself a new Cadillac, but it's got to be used to stimulate your business and to keep you in business. Basically, kind of like a working capital loan. You know, in my mind, and again, I don't know everything there is to know about them, but in my mind, it's almost like a good source of not equity capital, but debt capital to go back into a business and kind of strengthen it, because it allows you to take debt that will be paid off, you know, that you might have payable over 60 months, and maybe use this and, you know, like I say, push it well out to get you through these lean times. So I think it's really something that people ought to consider. Many of you may already know about it, may have already applied for it, or may already have one. But I do talk to customers, seems like on a pretty continual basis, and I recommend it, and they go out and find that they qualify, and some have taken advantage of it, some haven't. One of the downsides of it is SBA is going to take a lien on just about every probably non-real estate asset that you own for this loan in your company. But on that being said, SBA is pretty free to allowing, like if Scott and I want to make a loan to somebody, they'll do what's called a subordination, where we can have a lien on a piece of collateral that we need to do our conventional type financing. So they're pretty good to subordinate going forward. And then there's always the option of paying it off, and then that, in better times, and then that lien goes away. So again, I want you, certainly the PPP I think has been good for us, but this EIDL loan through SBA, I think is a good product. Another thing that's certainly offered on a smaller scale, we're a member of the Federal Home Loan Bank, and it's a source of borrowing for the bank, and also a place that we can keep deposits and get paid interest. But with some of the stuff they're doing for community support, they're offering what's called a small business boost loan. It's a loan that is used in conjunction with a loan that we originate through the bank. But excuse me, it's originated by the bank, but the bank gets reimbursed by the Federal Home Loan Bank. So it's basically a risk-free loan to the bank. And I guess I'll give you an example. I did one here about a month ago, working with a customer that needed a certain amount of money, but they could really only collateralize about 2/3 of what they needed. And so what I did is I originated my loan for 2/3 of the need, and then I originated this SBB loan for 1/3 of the need, and was able to take care of everything that they needed there. So again, it's not a huge pile of money, but I think it's been underutilized in the past, and I think it'd be a great thing for you to talk to your banker about it if this is something you need. Again, you're not going to know, so that's why you got to go in and sit down with that banker, tell him what your issue is, and then hopefully that banker can help you understand what products are available and what you might do to take care of your situation. Certainly, SBA has many things beyond that EIDL loan, other types of guarantees that allow us to make loans that we might not otherwise make. We are, as a commercial bank, is a preferred lender, and we have some great people on staff who really understand SBA and the work. Other banks in town do a lot of SBA loans as well. So, not to say that we're the only one, but it's a great product in the right situation. So I think that's really all I've got, unless you've got any questions for us.
I would jump in with just kind of a piggyback on what you said about talking to your banker, and I think this situation has reiterated how important it is to know your banker. I think, and to be able to have someone that you can actually talk to, whether it's on the phone during this situation or in person. But industry-wide, the number is 20 to 25% of all loan payments have been on some type of deferral during the last several months. That's a huge number. That's an unprecedented number, and I think that's where Jimmy said it led to our regulators giving us some leeway on dealing with that, because it's an overwhelming. As you all know, no one could escape this. Where a tornado or hurricane or something generally isolated, this affected everyone. The ripple effect is like nothing we've ever seen. And so that tells you, basically 1 out of every 4 or 5 loans in every bank in the country is on some kind of deferral. If that doesn't tell you that bankers are working with their customers, nothing will. And so, and some people have deferred a few payments, in hopes that would get them past this. And we've had to come back in and have those conversations and work something out, whether you're deferring the whole payment or just paying interest only, or making some reduced payment. I mean, there's lots of options. It just takes good old-fashioned communication to get to what's right for you. It's not a one-size-fits-all scenario. It's very individualized, and just like PPP was and others, it's about your business and what you need and how we can accommodate those needs. That's most important. So, Larissa, let's open it up, or do.
And I will reiterate that I've heard Jimmy and Scott and our friends at Bank Core South and our friends at Austin Bank say, talk to your banker the day before you're gonna, or not the day before, but before you're gonna miss your loan payment, and not after you miss your loan payment. They can help a whole lot more if you talk to them when you think you're in trouble rather than when you already are in trouble. And like they both said, it sounds like they have more tools in their toolbox than they ever have before. Looks like we do not have any questions. I'm going to pause for 2 seconds and see if
I lost your audio, Larissa.
we've got a couple on the phone that aren't showing up online, but you guys let me know if you have questions. Feel free to unmute yourself. We will also, we're going to post this on Facebook. Tried to get it live, but it didn't work, but we will post the video on Facebook. Please share it and encourage people to go to the NEDCO website. If you go to nedco.org, we're loading up all these videos that we do of these webinars. And if you as a business owner have something that you are interested in, something that a need that you think you would like to be educated on, let us know. And we have a wealth of knowledge in our NEDCO members that can help with just about any one of these situations. So please let us know.
Larissa, while you're maybe queuing up some questions, if anybody has any, I'll hit on one more thing that you talked about in your opening remarks on people having to look at changing their business model and kind of switching directions. And while there's not an answer, just a blanket answer we could give on that, I think the key that Jimmy and I would tell you is put your plan together. Put it, financially and in writing, in words. I mean, describe, because no one knows your business like you know your business. And so, we need to sit down and be able to understand both the numbers and maybe where you've been and where you're trying to go, because we can, hopefully help devise a plan to get you there. If you've got to switch gears, we've seen so many. I mean, I've been just amazed at our community and our businesses that have been able to switch gears. I mean, the easy thing that comes to mind was right out of the gate when restaurants couldn't open their lobbies, and I mean, seemingly overnight, there was curbside pickup at these places who had never done that before. And that's a small, easy example, but I know many of you have done things like that in many different ways. And for some of those, it's just a quick pivot, that word we've been hearing. But for many of you, it's going to take additional capital or additional equipment or resources to do that you're going to need, a loan for or something. And so we just need to understand the project or the change and what you need and how that's going to impact your business and how it's going to be different from before. And so I just say, put that plan together, talk it through, and help us to understand your needs. And that's going to give us the best chance of helping you if we need to do some kind of switching of gears or different types of terms and things like that. Jimmy, anything to add to that?
I don't think so. One kind of random thought that came to my mind was what SBA is doing for SBA borrowers. SBA is paying 6 months of payments on SBA loans. A lot of times when we bring an SBA loan into the conversation, there's some fees that go along with those, and customers are resistant to them. But in this situation, I'd have to tell you that the person with that SBA loan came out ahead because of what's been done here.
And I will do a quick commercial for our local banks. We are so blessed in this community to have local banks that are invested in the community and involved, and they want you to talk to them. They want you to come in and talk to them. I have a friend in Houston who knows that I've been involved in business assistance these last 6 months. And he said, I know I'm not in your town, but can you help me figure this out? And I said, well, the first thing you need to do is call your banker. And he said, well, I bank at, and he named a very large national banking institution. And I said, have you ever spoken to a human there? And he said, nope, I never have. And so I actually gave him the name of a bank in Nacogdoches to use. And that has worked out for him. He lives in Houston, but he could speak to a human here. And so use that ability that we have here to walk into your bank if it's open, if the lobby's open, or call your banker on the phone. They want to talk to you because they don't want your business to fail. Obviously, they want your loan to remain in good standing and use the tools that they have to keep it in good standing. I don't think we have any questions. If anybody does have a question and we haven't let you ask it, feel free to email me. My email address is in the chat box there. Like I said, we are going to post this on Facebook and on our website so that others can view it later. And thanks for joining. Thank you so much, Jimmy and Scott, for participating. We appreciate you.
Thank you for having us. Yep. Have a good day.
Thank you all.